Hi, Dean Jenkins with FollowMeTrades.com, and this is the weekly market update for the week coming up of August 19th, 2019. And man, it's been last week and the week before were wild rides on the market overall, and the indexes, individual stocks, and I think we should continue to expect that. So I've put together some points here on what to expect, kind of the big picture right now, what's going on, what's coming up in terms of what we know, right? So we've had a wild ride on the indexes, and we should just expect that to continue. Breaking news can and I think will cause continued volatility. Lots of things in play. We've got the China trade deal. We've got the demonstrations and unrest in Hong Kong. Still tensions with Iran. North Korea is still a big question mark. Plenty of things that are just unknown and going on. I call it a complicated week for planned news. We got the FOMC meeting minutes will be released on Wednesday, and more detail into what went on at the last FOMC meeting and the discussions. And of course, everybody's on everybody's mind. Future rate cuts. Are they going to do it? What's the probability of that? So we'll see. We've also got existing home sales coming out on that day on the 21st. The Jackson Hole Economic Policy Summit will be starting on Thursday. We should expect, some headlines and sound bites coming out of that could cause some volatility. Important report coming out on Friday, new home sales. Big earnings. We're wrapping up earnings season, but there's still some big players to report. And we got Home Depot on Tuesday, Lowe's on Wednesday, and then on Thursday, Salesforce, HP, The Gap, Dick's Sporting Goods are some notable earnings. So. The final point here is the R word, recession, is on everybody's mind. We had the yield curve inversion last week, which has been a very accurate predictor of recessions. So it's going to be on everybody's mind as the economic reports and all these things happen, and traders will be looking for any sign of it and reacting. So I think we should expect continued volatility in the market. Let's take a look at the S&P 500 chart in in these times of uncertainty, which the market always has uncertainty. It's good to just kind of resort to the reality of the charts. And what do we know? Not too long ago, a few weeks ago, the S&P 500, all the indexes put in new highs. But as we can see, if we draw a line here over the last couple of weeks, there's an upper boundary. Here's a lower boundary. We've had some fairly extreme volatility within this channel. So as long as we stay in this channel, there's no clear direction. If we break out of it, particularly the downside, that would be big news. And we probably would expect more of those to come. So we'll see how it goes, how the news breaks. The best thing we can do here is just follow our trading plan, be disciplined, be patient, and trade in a very steady way, not react to news and to market swings, but just use an established system. I've pulled back on my trading, taking fewer positions, and the ones I'm taking smaller positions because of the increased volatility. And if I'm in nothing but short trades right now. I have a bias to the downside. If those fail, we'll lose small, and if it takes off to the downside, we'll do well, and we'll add to those. And we got a ton of watch list candidates, trades to the upside, to the downside that we're watching. But watch this channel. Upper boundary on the S&P 500 about 29.47, lower boundary about 28.21, and we could ping pong around inside this for a while. If it breaks, that will be the direction the market is going to go with a high degree of certainty. All right. Wish we had better clarity, but we never do. We don't have a crystal ball. We just try to trade the realities. And it will break out. We've had periods like this before. It'll break out, we'll have a trend, and that's easier to trade. All right, take care. As always, welcome your questions, your comments, and your feedback. Thanks.